Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, and it's January 30th. So we're just wrapping up the first month of the year, and we got a few economic news releases scheduled for today, so we'll jump right on into it. We'll start off with personal income for back in December. We had a 0.1% back in November, so very modest in November. We expected to rise a bit in December, and we did. We kind of exceeded the expectations, so that was kind of good news there. The next item note is consumer spending. So this is what people are spending back in December. November was very small, as we know, 0.1%. We figured it would remain the same, and basically zero, less than what we even thought. So people are earning more money in December, but obviously not spending it. So that's where things are at in that direction. Obviously, we need to see spending increase a little bit as we get the economy moving. Hopefully, with the extra spending, uh, you know, things will kind of evolve here. So that's one of the reasons why they're doing this HARP 2.0 to get more people to be able to refinance their homes, save more money on their loans, use that savings, and hopefully put that back into the economy by spending it on other items of note. And while people are spending more items to note, hopefully create more jobs in the process. So the next item to note is actually one of the most important ones. Is we got the core PCE. Basically, what this is, the personal consumption expenditure price index for December. And the reason why this is important, this is actually the Fed's favorite gauge for inflation. So, and basically we had 0.1%, and basically it was across the board, 0.1% across. So very modest right now. The core is basically you take the headline number, strip out the volatility of the food and energy, and it kind of creates more of a stable product there. So basically, it's a very modest increase, which is kind of like what we need. We need some inflationary numbers because everybody likes to see their paychecks go up a little bit. So that's why inflation is important. But too much of it, gets to be kind of a drag. It's not as well good. So just up over to the headline news here. Sorry, I didn't explain that out well, but right now the stock market's down right now. A lot of it has to do with what's going on in Greece. A little bit of the consumer spending was a factor, but this is probably the bigger one. There's an impasse between Greece and its creditors. As we mentioned, Greece is supposed to be receiving a bailout in March, but first they have to have an agreement in place with their creditors, and right now they're having an impasse where they're not able to come to terms as to what's satisfactory for both parties, and creating some anxiety in the markets right now. The other item to note that may actually be more important is Portugal's borrowing costs are increasing. So this is jumping quickly to the forefront as Portugal has a bigger impact to their European communities as a whole versus Greece, as it's a bigger, has a larger GDP factor involved. So we're talking more money. So that's also that could quickly move to the forefront as well. Now, we'll see how the interest rates are being affected with the bond market. We've had pretty sharp increase, as you can see, with all the grains going upwards. We had an 18 basis point jump, so we started the day above the ceiling. And right now, the problem with that is obviously we've had 2 days in a row where we've had large basically what we say opening gaps. So we had an opening gap of about 18 basis points. We started closing a little bit, but we still haven't done that, and we haven't closed from Thursday to Friday's numbers either. So this could set us up for obviously a big drop to get a solid foundation. Not to say we won't come back up, but definitely if you can take advantage of these rates now, because I don't over the next day or so we could quickly see a reverse in that to close that up. Not to say it won't go back up, but again, we usually have a tendency when we have opening gaps that they get closed pretty quickly. All right, folks, that we'll call that a day. Rates are better today, so interest rates are better today. If you guys are on the website, please subscribe, get your free updates. Otherwise, I'll see you tomorrow. Have a great day.